Good afternoon, everybody. We are in LACA PST time zone. Welcome, David. Welcome, Detra. We are here with a special guest. We're going to be talking about, what's happening here right now, with everything that's, related to real estate, politics, and what can we do with affordable housing is one of the things that I'd like to uncover with you. And, of course, we're here right now doing this virtual show. And as you can see in the background, we have our new virtual room. So kind of excited to explore on this, but welcome and thank you, David, for co-hosting as usual. So go ahead and introduce our esteemed guest.
Yeah, it's our pleasure to host Detra Harris of Strive Wealth Builders. Strive Wealth Builders is a investment platform group based in the Bay Area. Detra has been in real estate investing for 30 years now, and pretty much every facet, from being a developer to being a multifamily investor to being a property manager for a large apartment portfolio. And we're very honored to have her on and kind of talk about Strive Wealth Builders as well as some of her more charitable pursuits. I think that's what really distinguishes her amongst investor groups out there. And I'd love to get her insights. And Detra, thanks for coming on the show.
Thank you. Thank you, David. Thank you, Jonas. It's a great pleasure to be here with you. Thanks for having me.
Absolutely. Absolutely. Well, first, just want to say, like I said earlier, behind the scenes, love the background, love the flowers. Tell us what you think about our background because we're in a virtual world.
I love it. I love it. I want you to share that with me, share that. Yes, definitely. I'd love to have that same opportunity. Okay. Yeah, it's very professional. It looks good.
I'll definitely do that.
I love
it. Thank you. Well, welcome to our show. We're going to get right into the nitty-gritty of these key points on what's happening. And of course, very excited to see Strive Wealth Builders. I love anything with wealth. As you can see, my new ventures is Ash Tree Wealth Group. So we have that in common going on. And of course, I'm excited, by the way, just on a side note, very excited for David. He is launching. Actually, he's already pre-launched technically. So his current endeavors right now is going further into his actual entrepreneurial path as an investment advisor. So, which, I won't steal the thunder, let him talk about that. But yes, I just wanted to share that with everyone watching and listening and tuning in. So I'm so excited.
Congratulations.
Today. So excited.
Yes.
So
congratulations, David. Yes, that's wonderful news.
Yes,
Thank
right.
you.
So we're celebrating with you here. 2021 is going to be an interesting, but I'm sure it's crazy as well. So take us through everything that you've been doing, of course, getting on social media, and definitely worth sharing that with the world because you're up to some really cool, very, very interesting projects.
Again, thank you. And you're certainly right. This is a year that has been very challenging for many of us. But in our industry of real estate, it's been very lucrative, and we've been able to scale underneath, the pandemic, especially moving our platform onto social media outlets has just been amazing. The attraction that we've been able to gain in our business club for real estate investors. And again, thank you for having me. I wear two hats. I manage a business club for real estate investors, and then I also manage our real estate investment firm, which we hold our multifamily investments underneath that umbrella. So I move around quite a bit, but my love is absolutely affordable housing, in particular senior housing. And so I work really hard to make sure that we can roll out those programs, underneath that umbrella and create some opportunities for our low income families. So that's very important to me. And that's a big part of what we do in our business club.
Oh, wow. That's amazing. It sounds amazing. But I'm sure it's a lot more than just a 1 hour show to really hear all of this good stuff. But what is actually happening in your neighborhood, let's just say, kind of more on a realistic perspective? Like, are you seeing a lot of migration out or in? And yes, of course, the obvious is, bigger companies are leaving the Bay Area. Of course, that's out there on the media. But what about the neighborhoods? The pocket areas where not everybody is thinking, are there going to be new housing, new properties being built? How is the family office industry? Obviously it's everything is virtual at this point and working from home. Take us through that. How does it look like on your side of California?
Well, we're in San Francisco Bay Area. So one of my passion is to help low income families obtain affordable housing. So in the Bay Area in itself, let's just take Oakland as an example. Oakland has over 70 homeless encampments in the city of Oakland, and they do have some task force and some groups that's helping the city to remedy how we're going to move these families off the streets into new housing. But however, as we all know, not only in the Bay Area, but across our states, this is an issue that we all have to come together as a community and help to resolve these issues. In addition to that, in the Bay Area alone, there's over 8,000 homeless families also that's in need of housing. So we've been seeing a lot of gentrification going on, in particularly in San Francisco. You may have heard on the news, it's all over the news, but prior to it hitting the news, we knew that this was going to happen in San Francisco, where you have an overwhelming amount of people that's moving out of San Francisco and moving into the East Bay areas, or a lot of those families are moving out of state as well. So we have some stats for California, but we also invest in other states, such as Ohio, Illinois, and Texas. So we've been following some of those markets as well. And we're seeing a lot of the same issues, especially for low-income families that are having a struggle with paying their rents. And so we know that there's moratoriums going on, not only in California, but across the states. And they continue to extend those moratoriums. So it's hurting not only the small investor, but it's also, it's hurting our economy in a lot of different ways. And so we are at our Strive Wealth Builders platform, we have what we call housing crisis attack movement. And what that is, it is a project that we put together. We're all volunteers that we're working in 10 counties locally in the Bay Area to help to remedy the homelessness problems. And what that means is we are working with nonprofit organizations, advocacy groups, we're working with developers, and we're working with some small investors, and we are rolling out a minimum of 500 units to assist in placing these households into stable and safe housing. And so far, we're at over 1,900 units that we've been able to identify to help work with some of your nonprofit organizations to place people that are in shelters, are program participants of the nonprofit organization. So we've been successful at doing that. It's a continued struggle. As I'm an investor, so I'm a landlord, I'm a property manager, and I'm an advocate. So I'm in the middle a lot of times on our platforms. And what I mean by that is there's a lot of debate on, who should be in line to get the relief. Should it be our renters, or should it be the investor in terms of being able to meet their expenses on the property and their mortgage payments? And in my opinion, it should be both. There should be relief not only for the small investor in terms of meeting their expenses on the property, but we should also work together to ensure that households are provided with renters assistance from different resources from the government, not only the government, local fundraising efforts, city and counties. We should all come together and create a plan that will help everyone, not only the tenants, but also help the owners of the property as well. I know I'm saying a lot there, but also in addition to that, what I see happening in 2021, and maybe you can chime in on this, is your institutional investors, your corporations, and those, what we call the big wigs, and that have really deep pockets. They'll be able to take advantage of the foreclosures and be able to purchase property uh, by the bulk, a portfolio of properties, and that's going to, unfortunately, knock out the smaller investors out the game. And so that's our fear. So we want to make sure that we support our smaller investors that may have our mom and pops. They may have, one or two single family homes that they're depending on for their retirement living. In addition to some other investors that have made, just came in the game less than 10 years ago, and they're still growing and scaling their portfolios. They're being hit really hard. Fortunately, our portfolio is in all four states are strong. Our buildings are performing well, but we do have a small percentage of tenants that are struggling. And what we've done is we've modified their rent, or we've reduced their rent, or we've put them on payment plans. So we're really trying really hard not to evict. And so that's important as well. But this is a controversial conversation, and righteously so.
Well, I'm taking mental notes as you're saying this. I have so many questions, but just hearing you talk about the affordable housing, 8,000 plus homeless people. I mean, just so much going through my mind. Like, are we looking at it as from a political point of view where should the government do something even more with that issue? And from a real estate standpoint, like you said, we have to support the small business owners, the smaller investors and business owners that are investing in real estate. What was the most difficult part, or rather, something for you to kind of dive into and say, what, I'm going to tackle this for 2021 because I am a landlord. I'm a business. I'm a real estate investor. I run a business, and thinking in that mindset. And then you're looking at from an empathy level, which is again, the pandemic has really, created twists and turns. Like what difficulties, or what is the main problem that you really want to tackle in Q1 of 2021?
Raising money, simple. It's very difficult to move forward with projects and be successful without capital. And also talking with investors to educate them on affordable housing and the opportunities that they have as investing into affordable housing projects. A lot of investors, they just shy away from that industry, and there's a lot of negative a stigma, in regards to investing into affordable housing, and a lot of, redlining and red tape, and a lot of things that we deal with, but it is definitely the way to go, in my opinion, and it helps our community thrive. So there's certainly ways that you can still meet your expected return on your investment by investing into affordable housing. And there's ways that we can create value, you know, when working with government and local city agencies and nonprofits, because it does require a layer of financing that is unusual and can be challenging. However, with a great system in place, the model will work, and I think it's worth us at least spending some time there.
How is that looking like for institutional partners, potential institutional partners? Is that something that they would be looking at, or is it too risky for them at this point with COVID and the pandemic, and you know any other potentials of issues that can arise? Right, we don't know. Even with vaccines, underway, we just don't know what this economy is going to look like for 2021. But how does that look like for institutional partners to partner with you in this initiative?
That's exactly what we need. We need the support from institutional partners to partner with smaller investment companies such as Strive Real Estate and what we promote, in addition to other smaller real estate investment firms that also would like to invest in affordable housing. A lot of your institutional partners and companies, they're tying down the tax credits and the HAP contracts, and it makes it very difficult for us to get our, to basically to get some skin in the game. Because they're, when the money hits, hits the communities, that's who's managing the money, and that's who has the opportunity to scale and to invest into our communities. However, it leaves out the smaller real estate investment companies such as ours to have that opportunity. So we would love to invest or partner with institutional companies.
I mean, so because I know somebody that's sort of in a similar space, they're creating affordable housing in Washington and here in Los Angeles, but they're doing a private placement. Like that's how they're raising this initial round for their project, and it's a pretty big project. So I was curious on how you guys were positioning to create that institutional partnership. Again, right? Communication, obviously, building that presence in front of them. But what have you done specifically that could, sort of influence others to listen and tune in what you're doing, and maybe they could be of support as well?
We're boots on the ground in our communities. We're working with nonprofit organizations because they hold the 501c3 status, which gives us the opportunity to apply for grants and the opportunity to apply for other funding for our projects. We have two projects right now we're working on that we were able to creatively finance. And one of those is a small fourplex that we're going to add 2 units, and it's a sixplex downtown Oakland. And what we were able to do is to engage the nonprofit organization that holds title to the property. We were able to partner with them and lease the property on a master lease for 18 months, allowing us to raise money under their 501c3 status and then purchase the property and move forward with redevelopment and adding 2 ADU units to the property. And then in addition to that, we've also brought in some equity and debt investors also to assist us with funding the property. But the key players to that, to help us move that forward, was the nonprofit organization and having that 501c3 status, which allows us to apply for the funding that we need to get the project started, to move us through planning department and so on. In addition to that, we also just acquired the old Woolworth building that's located in East Oakland. We'll be converting that into housing as well. Again, we did the same strategy where we partnered with a nonprofit organization that's allowing us to use their to benefit from their 501c status in terms of raising dollars needed to get the project on its way, and then we encourage real estate investors to come in as equity and debt investors. We are also working with the city to obtain funding, and then there's some other grant opportunities that the city has made us aware of that we will also apply for to help the project move along in terms of financial funds that's needed for the property. And
So
then once, sorry.
go ahead. No, I was gonna ask you. So Strive Wealth Builders is partnering with the nonprofit.
Strive Real Estate. So if I may tell you the difference between the two, because that happens to come up quite a bit. Strive Wealth Builders, we're a business club for real estate investors. So that's our real estate investment club, very similar to any other type of real estate investment club. But what's our niche is that we offer a personal development aspect to our platform in addition to building wealth. So we believe that the key to building financial wealth is through real estate investing and making really sound better financial decisions. And that goes hand in hand with building your personal development. wealth first. So we ask our, especially our new beginning investors, we like to encourage them to make sure you look at your personal finances, make sure that's all in order before you decide to invest in real estate. And so that's very important because I've made those mistakes coming up, and we try to avoid that happening to the new investors. So we work first on your personal development and your finances and your credit score, and building your credit score and getting you prepared for investing, making sure you have emergency money set aside and that your family is sound and secure and moving forward before you invest your dollars. And then once you have that in place, then you move into the wealth building, Strive Wealth Building. And that's the wealth building side of our business club. So our business club is totally separate from a separate entity from Strive Real Estate. Strive Real Estate is where we hold our investments and our multifamily investments. And we also partner with other LLCs and nonprofits underneath the Strive Real Estate brand.
That's amazing. That's amazing. I mean, you're just this human being with so much passion, and just listening to this, I'm like, just continue talking. You can host for me, because I have so many questions, but I don't know which ones to ask first. But I'm so glad you mentioned that, the whole personal development aspect of building wealth, you know.
Absolutely.
And I'm glad that Strive Real Estate is partnering with these institutions and nonprofits, so that it can, get your main projects off the ground. I think it's a very exciting time, but it's also, one of those moments in our lives where when we're launching and doing something like this and this level, like this caliber of a project, I think it can be, somehow, somewhat, we can't do it alone. So I'm sure you have a big team that's supporting, this initiative. And take us through that.
Yes,
Like, what do you do with your team? Like, I mean, you have to have somebody that's handling things that you can't handle. So what is it like in the
absolutely.
day of Strive Real Estate?
I'm really glad you mentioned that because I do want to give a shout out to the team that I work with, which is awesome.
Absolutely.
And real estate is a relationship business. Any type of business you have is a relationship business, but in particularly real estate because because I have to bring to the forefront money. A lot of times, especially in the Black and Brown community, we don't like to talk a lot about money, right? And so that's really important that we understand how money works and how to use money to benefit not only for us, but for our families, for our communities, and build a legacy for our families, right? So it's really important that we talk about money, and so that's why we built this platform for other people to join us, to learn, and to network and to build relationships. So that's really important for us.
And who would you like to shout out to? Because I'm
So my team consists of, we have a board of directors under Strive Real Estate. Uh, that would be Pamela Barnes and Curtis Sykes and Scott Isaacson. They have been working with me for over 4 years now. So they're really dedicated to Strive Real Estate, and we're scaling and building our portfolio. In addition to that, I have a project manager, Eleanor Hall. She is excellent, and she helps us to perform our due diligence on our properties. She has an extensive background in development, and so she is our go-to person when we want to um, um, uh, um, when we're analyzing a deal or when we need to push, our planning department a little bit better and our variances and so on that we apply for. She works directly with our general contractors. So we, of course, again, we have a couple of general contractors that we work with that we trust and that will come in and help us to move forward with our projects. And that's under Strive Real Estate. In addition to that, in Strive Real Estate, we work with owners that manage their own properties. So we give them consultations to help them with tenant screening, showing their units, or if they have any questions on how to move forward with an eviction, we can refer them to attorneys that we work with that help us to to navigate through our challenges, especially under COVID and the moratorium. It's very important that we stay abreast of the laws, which change rapidly and daily in different states. And so we're able to assist our clients in that area. Under Strive Wealth Builders, we have a marketing team that handles our social media outlets. And I have to say that now that we've had COVID, we've been having all of our meetings have been live. Our office is located in Albany, California. And typically we have live meetings, but under COVID, we had to move all of our platform onto Zoom, online platform. But that has given us such a great opportunity to meet other people in different states, to engage other investors to join us. So it's really been great experience moving on to the social media platforms. But I do have a marketing team that assists us there. I have to give a shout out to my husband. That should have been number one, because he is also, not only my greatest supporter and my best friend, but he also is a director of our companies as well. And so he manages our maintenance department, because we self-manage our own, so we own and manage. So we are quite busy with tenant relations and working with vendors and capital X projects, and replacing roofs and all of the above. So he is very busy in that department, making sure things get done and our properties are well maintained. So we are and we look forward to 2021 and bringing on more staff. I am at that level that I need to do that, just to assist me so I can have more time, because we also provide training programs for a new for the new investor. We just I love giving back. So I love to train other people and avoid them to make the same mistakes that I've made over the years. So I do one-on-one coaching as well. So we're really busy. And then we also have hosts that helps us to facilitate our monthly meetings for our members and our admin staff. And my executive assistant sent, she's fabulous, so she keeps me in line with my calendar and my projects and so on, and reminds me of certain things that sometimes I have those senior moments, and we forget, and she keeps me in line. So I have to commend my staff. And I also work with college students from UC Davis. I have a mentorship program for their real estate group. They have a real estate group at UC Davis. So I've been working with some of the college students, and they volunteered their time to help me in certain different projects and areas like the housing crisis attack movement. And we have a business book club. And so it's just really exciting. We have a lot of events and programming going on. So it's just really exciting. And I'm just so blessed to meet such great people.
Well, I'm so glad that you're giving that shout out, because you're right. When you're married and in this type of business, David can relate as well. We have such support, at home. I think that enables us to really kind of, step forward and take those leaps, right? When doing this type of business. And I'm sure you did not build this overnight. So right. So I am sure you did not build it overnight. So for those that are thinking of expanding, scaling, and they're in this real estate space, you just have to kind of keep consistent and really finding the best fitting people to work with you. And I appreciate that you have this mentorship program. It's one of the things I'm looking at for 2021. I was invited to kind of join a little hub where they can provide interns, but I felt like in my business, when COVID hit, I wasn't ready to really put that time. I wanted to really embody, rolling up my sleeves and understanding, what's my core. And that way, I think building a team, you're able to translate that to them. So, it's one of those strategies that I had to really, kind of pin down for myself. And it's not going to be for everyone. I think everyone has, we kind of find our way. So I really appreciated hearing that you have a big team, big enough team. And I think with their support, it's definitely showing with all of the initiatives and projects that you have going on. What is the most I'm just curious, what's the most difficult or challenging aspect when you're working with a new investor? Kind of bringing them to this, hey, we can launch and kind of help you out with personal development, get you on the right track, becoming an investor, going into this real estate game per se, and hopefully you will become successful. That's one of those examples. Like what has been sort of the most common challenges that they face when they're working with you?
Analysis paralysis,
Mm,
the fear. I have several of my clients, I call, I say my training course clients. Um, a lot of them have definitely attended other webinars and classes regarding in relation to real estate investing. There's a ton of them out there, right? YouTube videos and webinars and speakers and all these different types of real estate investing courses that you can engage in. All wonderful, because education is key, and we believe that. But a lot of times they have challenges on moving forward after they complete that course. And they really do need one-on-one guideline and hands-on training. So when a lot of times when they come to me, they're afraid to invest in their first deal. So they find themselves to continue to watch YouTube videos, and I sit in on a webinar or a podcast and so on, and they never get that first deal. And here it is, 1 year, 2 years pass, and you still don't have a deal, but you're still attending these seminars and paying this money. Some of my students have, and our clients have, paid up to $25,000 for a course, and which is typical in this industry. And my philosophy is, hey, take that $20,000 that out of that 25 and invest into your first property. So the challenge usually is finding their first deal and investing in their first deal. And often the most challenging part of that is, where am I going to get the money for my first deal? How will I raise that capital? And there's a lot of ways that I can help you to find your strategy. Everyone's strategy is different, and there's many ways to do that. But that's what I hear most often from new investors that have spent a lot of time just doing research. They analyze and analyze and analyze. Well, you have to get the deal. You have to get your feet wet. You have to get some skin in the game. So I try to encourage them to move forward and do it and push through those fears.
wow, like it's such a complex question, but the answer is so simple, right? I think the perfectionism usually drives us as human beings, right? To kind of pause and overthink. I mean,
Yes.
I literally would tell you right now, I have met so many people, same way when they're launching their business, they overthink. So they think
Hmm.
everything has to be perfect. I
Yes.
really believe just roll up your sleeves and figure it out as you go,
Do it,
right?
because you can't avoid not making the mistakes. You're going to make mistakes, that's just a given. You can never learn everything in this business. You surround yourself with those that know more than you, and that's my motto. I love meeting experienced investors, and I learn so much from them and my mentors. And it's I continue to educate myself in this business. But you have to take that leap, and you have to at least get your first deal, and it gets better, and you learn more, and you're less intimidated when talking with lenders and investors, and brokers and real estate agents. So that intimidation is there. That fear is there. And and I get still a little anxiety too, especially before I close escrow. It's like, oh my God,
Mhm.
it's nothing like closing escrow and closing your deal, and it's just a beautiful feeling. So my courses, I guide you to getting that first deal, not just providing you with materials, but we are working on getting you that first deal. And that's my goal, is to make sure you get in that first deal.
And I mean, if you're shelling out 20, 25 grand, to go into a program, you would think it's really more about the deal and getting that deal with you than so much of, here's a bunch of, worksheets and textbooks. I mean, I've heard horror stories on some of these,
Oh
programs
yeah.
that are sold. So not, disclaimer, we're not here to, bash anybody. We're just talking,
Exactly. Right.
we're talking more about the strategy behind it, which is,
Right.
knowing how to sift through that and really find a program and a coach that can really help you get out of that analysis paralysis. I think it's a mindset growth as well.
Detra, to your point, I think that a lot of the analysis paralysis comes from is that one, as the market moves along, cap rates are compressed nationwide. I was on a phone call with a deferred sales trust administrator yesterday, and he pointed out so much about real estate is timing, and I think that tends to be the challenge is finding a market where you have yield, where the yield versus risk is still attractive. So I can see kind of sometimes where the analysis paralysis comes in. But that being said, I think there is something to be said about the people who charge $25,000 for courses and they don't produce anything, or I mean, or they don't, lead someone to a deal. If me as speaking from a broker's perspective, if I charge $25,000 for my service, you will end up with a deal in hand. And if anything, probably try to provide you with the blueprint to stabilize that asset too. It won't just be this is what you need to do. This is how you underwrite a deal. This is how you see capital for a deal. I mean, because that to me is the easy part, which is, I guess, being in the multifamily investor side, defining a deal, once it comes, once get an escrow, ultimately it tends to be the easy part. The hard part really comes after where you're stabilizing, unless you're buying something that's already a stabilized asset and you're getting a limited yield. But the hard work in a lot of cases come after you close, once you have to stabilize that asset, once you have to add the value to it. So, I think that that's a part of something that people have to be conscientious of when they're looking for deals, especially in a market now where, cap rates are becoming, significantly compressed. I have conversations with people, on a weekly basis about their concern about getting to certain deals or want me to take a look at it. And it's just really, amazing how much cap rates, have compressed and just in the, deals when I look at the comps form. So it's like, the same deal that they're looking at now, that's $100,000 was $80,000 a year ago, or 60, $70,000 per unit, a few years ago. So I think that's part of the reason where sometimes the trepidation comes in to get into the market.
Oh yeah, I was just saying I agree. I totally agree with you. Yeah.
Yeah, and I think that's a part of it is because the reality of it is that the market that we're in now is that debt is easily available. Equity is even coming a little bit more accessible depending on who your relationships are. But I think the challenge is once you get into an asset, do you have the team or do you have the skills yourself to be able to stabilize that asset? Because regardless of the matter is if it doesn't perform or not, the people you borrow money from is going to want their financial obligations being met. On a monthly basis. Your lender doesn't care, that your tenants are not performing, or they care to a certain extent, but there's only so much leeway they're going to give you. That private equity you raised is going to expect the returns that you agreed to give them. The passive investors are going to expect the returns that you agreed to give them. So, it's something that you have to just be really cognizant of when you are with OPM, especially with OPM. I mean, if you're using your own money, you can kind of be as, I guess, risky as you'd like to be or you feel comfortable with. But when you're using OPM, definitely do think you have to be a little bit more conscientious.
Absolutely. And great points, David. For instance, we have a property in Chicago that we have a tenant that hasn't been paying rent, and there's a moratorium. And then in addition to that, we are on schedule to cash out our investors, the early first quarter of next year. And, so there's some challenges there because we can't sell the property with the tenant not paying the rent. What investor is going to purchase a property with the tenant is not paying rent? So we're at a standstill. So we have to. So it's exactly that. You take these risks, especially when you're using other people's money, and you bring in joint venture partners. They expect their return, and you have to definitely have a plan of how you're going to exit plan from that, or if it doesn't go as planned. Of course, no one expected the pandemic. And so this is all, has taken us all for, that's a curveball for us all. Nonetheless, we have to, make sure that we have a plan in place for when situations happen. And what that plan will look like. And so you're absolutely right. And a lot of time, going back to what Jona said also, with the fear and analysis paralysis, is a lot of investors that are local here in California, or are wherever they may be, they are reluctant to invest out of state. So, I look at the United States as a platform for great deals all over the United States, not only in California. However, if it depends on where you are and your level of experience, and how much money do you have or can raise. So all those things you have to factor in, and that's really important, and especially after you close. So thank you for saying that, because that's really important too. Not only we don't talk a lot about managing the property after you close, and making sure that your asset is performing well. So all of those things are very important. But again, the only way to get that experience is to do it, just like on the job training, and to have a mentor and partner with someone that has that experience that can give you guidance to reduce your risk is important.
And to both of your points, as I listen here, is you're right. Like, we feel nervous trying to make our first deal. So this is how I look at things. It's like, if you can't even pass the small deals, I don't know about the bigger deals, right? So if you're able to put your mind and get out of that analysis paralysis, everything else will fall in its place. And yes, we definitely need to have this focus where after you get that deal, it's really managing that asset. It's a
Mhm.
business, right? So we want to make sure, everything is flowing, it's cash flowing, right people are helping manage it. And of course, you being the say the CEO of that business or that, company, you have other responsibilities you have to face. So I think, having the team, having, sort of the plan, of attack, so to speak, like how are we maintaining and managing this asset or these properties, are so important. I think for somebody just getting started, whether they started in the fix and flip, or maybe they got rid of a townhome and now they have this cash, and they're going into this syndication of multifamily properties, and they just want to be an LP, or maybe they happen to partner up. I think it's so important to understand the exit strategies as well. What would be
Yes.
your
Uh,
sample?
because your newbies, they don't know what a cap rate is.
Mm-mm.
They're not familiar with that. Now, your seasoned investors, they understand, the terminology and what's important when analyzing your deals, to make sure that you have a stable investment. But I don't advise anyone that's new to start off with multifamily. It's a lot more details involved, and you should definitely have a level of experience before you invest into multifamily housing. Definitely starting with a single family house, one home that you, or a duplex or a house hacking, is a little more attractive to those that are new in this business. And then you gradually, as you learn, and then yes, if you want to move into multifamily, industrial, office, retail, or what have you, maybe not retail at this time. You might want to leave the retail alone right now, but
Right.
then, but as you progress, and you learn more, and then there's just it's the possibilities are endless, in terms of where you can land your investment and invest wisely.
Unless you're a big dog
Well,
already in this game.
well,
So
Exactly,
well,
like
well,
have
David.
whatever you want.
David's up there. He's in bed with all these big wigs, so he knows how to get the job done.
what I know is from firsthand experience. I mean, that's really what I know. And I've kind of been through every, aspect of multifamily investing, especially on the smaller side, with the exception of probably fire. So what the points that I was going to make out is that with multifamily investing is that you live and you die by your management. I don't, as a broker, you get, especially even being active on LinkedIn, speak to investors all the time, and a lot of their requests tend to be what we call unicorns. So they tend to fall within some limited parameters. They tend to say, I'm looking for 100 units, class B or C, 70s, 80s construction, in the South or the Southwest, and with some light value add opportunity. And irony of it is that everyone's looking for those opportunities, but the reality of it is, if you don't have a strength in management or you don't have a team in place as an investor, it doesn't matter if I find you that deal or not.
The
Absolutely.
unicorn deals for sure
Mhm.
is I think unrealistic at this point. You
Right.
know,
That's the leverage that I have. Fortunately, my background is in property management. Working for some of your most largest, um, property management companies in the United States. My last employer as a portfolio manager was with FPI Management, and they are in several states across. They have thousands of units that they manage. And you're absolutely right. It is very important to have a great management team that understands the markets, that understands how to manage large portfolios of units, and from budgeting, to capex, to tax credits, and the above. Is highly important to do that. And unfortunately, a lot of property management companies, they get a really bad rap in terms of not being professional, or you're not understanding the markets, and not uh, giving great service. And I have to say, of course, I pride myself in being a great property manager. I really care about the asset. It's important that it's well maintained, that I meet the expectations of the owners as well. And now I'm able to use my experience in Strive Real Estate, where we own and manage. So that's hugely and very important to make sure our properties are well maintained.
Yeah, and I think one thing you may have missed on there is that tenant relations is key, especially when you own and operate, or when you operate, or as a property manager where you manage in Class C communities, wherever it is nationwide. Tenant relations is really key. If a tenant doesn't see it, property manager or owner's face, at some point they're going to tend to self-manage and self-govern. And in a lot of cases, that cuts you out as the property manager and or as the owner, as far as being paid rent, and your properties being taken care of. So I think tenant
Exactly.
relations is something. When you see a lot of Google reviews on property management companies, they tend to be negative, and a lot of it, tends to be around tenant relations, lacking in that space.
mm,
Exactly. Especially when you're own property out of state, because I can't just, get in my car and drive to the property. And you're exactly right, but it's important that I have a presence there. I do communicate with our tenants. Even though I have property managers, we have 5 property managers, but it's still important that I communicate with the tenants as well, and they know that I do care about their well-being. And tenant relations is huge, of course, and in terms of making sure we reach out to them and let them know that they're valued. And also your expectations, having a really solid house rules that and an enforce your rules is really important. And when a tenant when you're not an absentee owner, a tenant will definitely uh, spend more time in helping you to manage the property, and they have they have pride in where they live, so that's important.
Agreed.
definitely. I think it's a team effort, whether you're the landlord or the tenants. I think it's a form of ambiance and our approach to being empathetic enough that we're all in it to make this business work, right? Because without the tenants, you don't have cash flow, you have debt. bad debt, right? Oh, I mean, unless you've paid, for it in cash. But I'm curious too, like, what was your passion behind? I mean, understanding everything that you're about and what you're doing, it's very exciting. But I'm curious, what was the passion behind that? Like, what really took you to the point of launching, and then here you are, you're just going. I mean, obviously you practice what you preach. So,
Thanks for asking that question, because I have to give you the story behind that. Uh,
absolutely.
16, 16 years old. I'm born and raised again in San Francisco, and grew up in the Bayview, Hunters Point area, and low income neighborhood. Although I was raised by a working class family, but we still lived in Hunters Point and in those areas, and certainly a large portion of my family did also. And so at 16 years old, I lived with my grandmother, and she decided to move into senior housing. It was at the time in the Fillmore, it was the Pink Palace. And what the city did was they converted, which was the projects. So they converted the projects into senior housing, up 160 something units. And she moved into that building, and she wanted to take me with her, but I didn't go with her because I felt that she was going to a nursing home. And I was not familiar with apartment living. We lived in houses for the most part, off in the Bayview, but I just it didn't feel good to me, and I didn't want to move into what at the time you considered a old folks home, right? And then I thought she would be moving into this nursing home and she's going to die there. Well, unfortunately, she did pass away in that building. But I didn't like, when I visit her, I didn't like the management. See, coming back to the management, how they were managing the property. I just thought I could do a better job, and so I didn't like her living there, and I didn't like the feeling that I got when I visit her, and I didn't like looking at the other seniors. They just seemed not happy, and I wanted to make a difference. So that was my first exposure to senior housing. And as I moved on and graduated from high school and then went into college, it was always in the back of my mind that I had to do something in that industry. I had to make a difference there. And that's where it started for me with my interest in real estate,
Wow. So it's like it
literally.
was rooted from, your youth. Like that really impacted you.
Absolutely. Yes, I ended up moving into with my auntie, and she didn't have anywhere for me to stay. So for my whole senior year, I stayed in the living room literally out of bags, with my clothes in bags for my whole senior year, because I did not move in with my grandmother, and I could have had my own a room, because she could have gotten a two-bedroom, but I was just afraid. And so I didn't make that decision. And so when I graduated from high school, it just a snowball effect. And then I ended up meeting someone that was a broker, and he encouraged me to get my real estate license, and it just kind of took on from there. And I started working for the housing authorities, of Oakland Housing Authority, Contra Costa Housing Authority, and some of the property management companies. I just continued to build um, my credentials from there.
What year was that specifically that you started
Oh,
seeing it?
you tell it. I'm gonna tell my age.
No, no, no. I mean, was that like
Ye-
your early 20s, your early 20s? Was it, were
you
you
should
going,
know
Yes, I,
better.
I was in my early 20s. Yes,
sounds like
yes.
my
Oh,
story.
over 30
That's
years ago. Yeah, it was over 30, a little bit over 30 years ago
oh,
when I
okay.
when I started. I've never worked in any other industry. It's
Yeah.
all real estate. My whole work,
I can so
as
relate
work.
with you. That's why I asked, because I
Yeah.
started my career in my early 20s. I was literally, I had the option to go to a standard college at 18, and totally relate with you. It's like everything just kind of happened. You notice, like, when you're passionate about something, it's like you don't really wear that out, but it shows in the quality of your outcome. It's
Yes.
always makes me curious, what was the passion behind that? And obviously that really moved the needle for you per
Well,
se, right? Like
well,
Did.
kind of continue
yeah.
that.
Deidre, you have a powerful why, and I think that's really something to point out, and I think that's probably what distinguishes your firm and from a lot of other real estate investors and investment firms is that a lot of the mindset is, for better or worse, is more opportunistic. I mean, we're in a you're in a business, of course, to make money, but you're also in a business to feel a greater need and not necessarily look at what's the most cash flow that I can squeeze out of an investment. You're in a focus of affordable housing, and it doesn't really seem like your, investment approach has transitioned over the last, 3 decades of how long you've been specifically focused on Strife Wealth Builders. So I think that's something key to point out. There's a lot of real estate investment groups based in California, definitely based in the Bay, but it tend to be a lot more opportunistic. They're looking for distressed assets, or they're looking for assets where there's opportunity to raise the rents to market rate. And affordable housing, to your earlier point, tends to be the purview traditionally of the larger investment firms because their yield doesn't have to be the same. It can be conservative, but normally when you're a
Right.
smaller investor, you tend to go for the highest yields as possible, especially when you're using OPM. But whether you're using
Yes.
OPM or your own money, you tend to go for a higher yield, but your focus is different because you are committed to the preservation, growth and preservation of affordable housing in the Bay Area, which is so needed.
Exactly. You're exactly right. Of course, I do love cash flow, and so I'm also looking for that and building wealth and legacy for my family as well. But I try to find a medium. How can it work for both, for the community, and how can it work for me and my family as an investor for us to build wealth, and then how do we train others to do the same? So everyone can benefit. There's more than enough money in America. Are you kidding me? Millions,
Totally.
billions,
I mean,
trillions.
in my humble opinion, based on that is, I think when bigger, bigger investors are looking for those distressed deals is, it doesn't necessarily mean that they don't have a good intention. It's more like, how can we provide that for our investors? So, I'm for both. I'm all about great initiatives, great charity, intentions, behind the scenes. But I'm also for profit, like you're saying, is, even with my own strategy, it's really building wealth first within my family, because I feel like if you can't fill that glass, there's nothing overflowing for you to share. There's not going to
Mhm.
be that empowerment for you to go out there and say, hey, how can I be of help? So, even with my recent goals, it's really to build up, what I can do in my own small ecosystem. And it doesn't always have to be measured with that money, right? Because like you said, there's OPM. It's all about putting yourself out there and sharing that opportunity. You're right. I mean, America is a big country where dreams are made,
That's
right? As
right.
long as you stick with that passion and you keep creating an opportunity to meet people that's going to push you and give you that. So this is the challenge of this show, David, right? We're
It's
all
not. It's
supporting each other.
yeah.
That's right.
I no. I mean, I appreciate that. While I appreciate that optimism, I think we also need to be realistic about it. And I think you spoke to it the other day, mentioning another capital raiser. But America, especially real estate investing and capital raising, is not a meritocracy. So, and I think that's something that you really also need to just be, when we, present that, just kind of have a measured expectation for any aspiring investors. It's for them to understand that depending on where you come from, depending on who your access is to, for resources, your results may vary. It's kind of like what lawyers say, the Z
Yes.
copy at the bottom of the screen. Depending on what your relationships are, depending on your access to capital, depending on your level of knowledge and sophistication, your results may vary. I think that's something that we should always be cognizant of to kind of just, provide a measured, conversation. I mean, me as a real estate broker, the conversations that I have with people vary based upon where their, levels are, as far as risk, being risk averse or, risk friendly, and as well as far as what their, capital is. Because ultimately, depending on who you are, if you're a beginner investor, you're a more sophisticated investor, your appetite for risk or your ability to fail measures greatly. I mean, varies greatly.
Yes. Exactly. Yeah, everyone has different goals. Everyone, we different experience. Our financial status is different, the style. So I always encourage, investors to create your own style. Yes, we have lots of experts out there that give great information and training, but you really have to develop your style and, and determine what your goals are and how you want to live your life and how much money you want to make and give back. And all of that is really personal.
There you go. It's all about who we want to become in the process and what exactly we want to do with it. So I think, comes with all of this good stuff comes with responsibility. So I think, really learning and understanding, who we are in this, I think makes us good real estate investors, real estate professionals, and of course, big opportunities for businesses like us, have a chance to give back and create those, what I call the love, the giving back love, spreading the love, that we can. So in one way or shape, it doesn't have to be about money. It could be just your time, just like you joining us here. Very honored to have you, because we appreciate, more women joining this conversation, as Dave and I've talked about that. And we just want to thank you for sharing this time with us and really your knowledge. I mean, I have probably 100 questions that I can ask you, but we'll save that on another episode.
Okay, that
Right.
sounds good. Thank you
And,
so
and
much for having me. It's been a lot of fun, and I love talking real estate and I love learning. So this is definitely, very fun for me. And thank you.
Well, this is our pleasure. So thank you again. And
thank
Dave, thank you for co-hosting. Let's get to the point.
Thank
We'll
you,
see you on
David.